Can I dig deeper into the family office, if you don't mind? And for our audience, I think a lot of my audience probably don't even, they know the word, but they don't know the background and everything. Could you kind of help us with that? Yeah.
Sure. So it is a term that gets thrown around a lot. And unfortunately, there's not a distinctive definition, not a singular definition, because as the adage says, if you've met one family office, you've met one family office. Every one is going to be different, just like every family is different. But typically it is some kind of pooled investment vehicle, a partnership that is investing on the behalf of the lineal descendants of a patriarch or a matriarch. So somebody that had created wealth, they create this structure or entity to invest assets on behalf of their lineal descendants to maintain a quality of life over a certain time horizon or over multiple generations. And so that's the definition of a single family office, in my opinion. It starts to get a little bit confusing because there are some really, really big ones, obviously, like the Pritzkers or Michael Dell or some of these large groups that they really behave like their own private equity wealth management firms. They obviously have huge amounts of assets under management, but there's a spectrum, right, of people. And it's really less of a dollar figure or assets under management and more of a mindset of, I want to create something to help my lineal descendants. Some people don't think that way, right? And there's no judgment associated with it, but some people want their last check to bounce, or they want to give it all away upon their death, or they want to encourage entrepreneurship and a work ethic amongst their, younger generations. There's all different structures and thoughts that go into it, but that's how I view the single family office.
Wonderful. Are there certain limits? Like it could be 20 million to 100 million, certain range. Then there are larger ones from 100 to 500 million, I've heard also. What kind of distinctions are there? Are there more people involved at the higher level? There are more checks and balances, I guess.
Yeah. So this is an interesting question because I've been in this space for about 10 years now. And when I first learned about this community, the answer would have been 100 million of investable assets probably would qualify for you to be considered a family office. Now I think that number is more like 250, if not 500 million, to be honest, because the cost of running these organizations and the fight for talent has become very fierce. And so in order to have enough assets under management to clear that overhead, that denominator number of AUM has gone up dramatically. And that's why you're seeing the growth and the prevalence of multifamily offices or independent RIA structures where ultra high net worth individuals and families can get some of the same pros and benefits of having a family office without necessarily having the AUM to run a single family office. They can join a platform, plug into an ecosystem that can provide compliance, regulatory, back office, investment professionals, et cetera, without necessarily having to take all that burden on themselves. And I think you're going to continue to see that trend play out moving forward.
Totally. If I may ask, so a private person investing in syndication is looking for cash flow, right? That's the number one thing, preferred returns, we call it. And then equity gain, when we sell or refi and at the exit. What are the main goals of the family office then? Are they very similar or they are different?
Yeah, every family is going to be a little bit different about where they are in the risk spectrum, right? But if you just think about it mathematically, this is the way that I like to talk about this. If you have a bucket of assets, right, a pool of capital, you figure that inflation is going to be 2 to 3%. There's a lot of conversation about inflation going on right now, but if
5 even.
Yeah, I mean, people have different views about where it might be heading or not, but just let's use 2 or 3%, generally speaking, as inflation. Then you've got your spend rate, right? What it costs to live your life and to maintain that quality of life. if you go to the beach every summer, if you own multiple homes, if you travel privately, education, healthcare, et cetera, let's peg that at a 4% spend rate, right? That's your distribution level. Mm-hmm. And then you've got the exponential growth of your family. Families have a way of growing where if you have 3 children and each of those children have 3 children, pretty soon, that number goes up fairly quickly. So you've got your inflation, your spend rate, and this growth of mouths to feed. When you put that all together, you probably need to be averaging 10 to 15% annual returns to maintain that quality of life over multiple generations. So you are in the risk-taking business if you truly want to be a family office today. Now, cash flow and yield are important, right? Because they can go towards that overhead spend. But in terms of asset allocation and how families think about investing, they're always trying to fight this dragon of inflation and family growth. And it's very challenging. So what they're trying to accomplish is what endowments or large institutions try to do. And frankly, it's really hard to average 10% plus annual returns.
I was going to say that.
Plus, you're also a taxable entity, right? I mean, you can do things from an estate tax perspective to maybe diffuse some of that. But at the end of the day, we're talking about taxable entities that are investing. So it's even harder because you can't look at gross IRR. You have to do it on an after-tax net of fees basis.
Surely.
Challenging.
So this is a very interesting thing what you just mentioned. These multifamilies and a lot of things, people are paying overpricing, and the cap rates have shrunk so much. 2.5 cap rate, which used to be 6.5, it's dropped by 4 points. So, and the money is so cheap, like the deal I bought in Austin, Texas, 308 units or so, I got 2.68% from Freddie Mac government, and then the inflation, like you said, it's 2.5 or 3. So to give the investor the cash flow of 7.5, let's say, we just have different numbers. They just can't juggle together. Tell me more. How are you making it happen, or are you,
Yeah. So it's hard, right? So for us on the real estate side, we're trying to solve for double-digit cash on cash yield. And to your point, cap rates have gone down since I've been in this business over the last 10 plus years. I don't really see that trend changing significantly, even if there is inflation or, significant rate heights. I think, unfortunately, the market is so flooded and the system is so flooded with liquidity and cheap capital that it's going towards real assets, right? So that's why you're seeing pricing in anything from commodities to real estate to Bitcoin to NFTs, anything that they can put capital towards. It's going to, I think, continue to decompress pricing. So I don't see that trend happening anytime soon, changing. What we've been doing from an investment standpoint is going towards smaller deals. So if I were to pitch you a couple of years ago, I'd say we were looking at $15 to $20 million acquisitions. Today, that's probably more like $10 million acquisitions because we just can't get into a pricing war with some of these other private equity groups that have all gone downstream. So now we're even doing sub $10 million deals, which we can still find good value there. There is pricing premium, but it's just as hard to close $100 million deals as a $10 million deal. And so it is fairly time consuming. And we've gone to some new markets, right? So we're looking at some places like Fort Myers, Florida, Fort Lauderdale, Savannah, Georgia, El Paso, Texas, where a couple of years ago, we probably wouldn't have spent a lot of time, but it's becoming so competitive that you need to carve out a niche. You need to do your homework in order to find decent value today.
I love it. You said Fort Myers. Actually, Fort Myers is very much in my stream. I just built Cape Coral, a multifamily A++ for $13 million.
Oh, wow.
Round up construction.